I learned from old school floor traders who kind of retired from the floor and went to the kind of educational job trading, online trading. Trade like your life depends on it, because it literally did. So I think with that mindset, you trade with way more responsibility. No, I would not necessarily agree. I would say I don't have to educate myself anymore. The online trading, that is quite harsh, right? I want to change the industry as well to a better.
Hi guys, Peter from Fintokei here. Welcome to Fintokei Stars, a podcast where we will be interviewing the most successful traders who manage to get the best payouts out there. If you're motivated to start your trading journey, this is the place to be. We are definitely starting on a high note today because here with me is Bernd Skorupinski, who some consider to be one of the best pro traders in the world. Hi Bernd.
Thank you for having me.
Thanks for coming. Bernd has been trading with Fintokei for past 6 months. He's using the $400,000 ProTrader account. So far, he managed to get payouts totaling almost $70,000.
67 or so, yeah.
Oh, that's very nice.
Yeah.
Bernd, could you please introduce yourself a little bit? Maybe someone doesn't know you yet.
Yes, so my name is Bernd Skorupinski. I'm trading full-time since now roughly 11 years. I consider myself a multi-asset trader, so I trade everything, Forex, futures, and stocks. Right now, I'm pretty heavy in the prop firm space. I'm the all-time record holder for the biggest prop firm in the world, FTMO, with more than 120 leaderboard appearances. I'm managing almost $4 million in prop firm capital. I run a licensed investment consultancy based in Dubai, offering education, and that's basically me in a nutshell. And most people might know me from YouTube as well, doing there really very well as well. So I guess people might have seen me somewhere.
Yeah, so you can see I'm not exaggerating when I'm saying one of the best pro traders in the world. Bernd, let's start from the beginning. Can you pinpoint a moment in your career when you said, I really want to start trading? And why was it? Was it like financial motivation? Did you want to get more money? Did you want to quit your daily job? Or did you want to do something challenging? Or what was the motivation for you?
That was exactly the case, what you just mentioned. So I had I had a life before trading.
Oh, yes.
And I'm 40 years old, by the way. I'm not the youngest anymore. So I had a corporate job, and I was in the automotive business. And at some point of time, I realized the corporate world, again, I don't want to demonize it. For some people, it's the right choice. It's kind of a perceived safety net for some people. But for me, it was like, nah, it's not for me. I realized that being a few years in the corporate world, I need to do something different. I want to be my own boss. I want to be more independent, have more freedom, all the cliches. I want to meet all the cliches in the world. And then I just found a place where I could start to learn how to trade. And I started my trading journey, learning how to trade in parallel while I had my corporate job, was doing trading on the side. At some point of time, I was doing quite well in trading. And then I had the choice to do should I continue both or should I drop my corporate job? I dropped it and everything else is history. So this I'm doing since 11 years. So yes, it was actually I would say the unhappiness of being slave to my desk, the 9-to-5 grind led me to trading. It was never financial motivation. And I think that's a major driver. It was a major driver to my quote unquote professional trading success, because my driver was never financially driven. It was driven by a bigger purpose, by a bigger reason, by just really want to change my life. And that's what I managed to accomplish.
Yeah, that's great to hear. I think a lot of viewers are in a similar position. Maybe they have their corporate job, they are trying to trade on the side. So I think where you are now at, I think that's their destination. So I hope we can motivate a lot of people today.
Yeah, that's also my goal, right?
Can you remember the first impulse for you when you heard about trading for the first time? Was it a movie, was it a book, or what was it?
So since I'm a bit old school, and back in the days when I started with trading, 2012, 2013, the environment was completely different. There was no social media, there was no YouTube, there was no Instagram. It was rather niche, right? So I think my motivation was movies, the Hollywood movies, the Wall Street movies, and just the Wall Street in general. seeing these movies, people sitting on front of multiple screens and betting on financial markets and making money from that. Yeah, I think that was my motivation. Nothing, no single person, no single platform. It was more like the movies, like being curious. Hey, this looks like a profession, and I assume since it looks like a profession, you can learn it. So let me try to learn it, right?
Yeah, I guess the basics didn't change a lot, because back then I used to see people having a lot of screens, making a lot of money in movies. Now you see it on social media.
The transition is just from movies to social media, basically. Yeah.
Yeah, what would I like to know next? Can you actually remember your very first trade? Was it successful? Did you make money or did you lose money?
I've been asked this question a few times. And my first, and that's why I remember it. Not only that, because I was really proud. This was my life trade. So I also remember that my journey from the beginning. I was practicing, I think, 3 months in demo mode. 3 months. I was just trading demo. Then after 3 months, I went live. I traded so I started practicing in stocks. Then I went into futures. My whole life I was trading futures, the underlying asset. So I'm a futures trader. I'm a futures. I would consider myself a futures trader. And I was also on. And that's so funny because we had a discussion. It's now really interesting because we had a discussion before the podcast started. My first trade was on natural gas.
No way.
It was a short on natural gas in the lower time. I think it was a 4-hour chart. And I made money. I think I don't know the exact number, $427 or so. I printed it out. I put it on my wall because I was so proud. I think I didn't feel loser afterward. That is on my first trade. And it was a short on natural gas. Yeah. Now I remember because we had the discussion before that you like natural gas.
Yeah.
But it was a purely technical trade. Back then I was not doing that fundamentals yet. Yeah.
Yeah, that's beautiful because maybe if you lost money at your first trade, you wouldn't be so motivated.
Yeah. Who knows? But it was just part of the process.
Yeah, that's nice. Yeah, I definitely remember my first trade, and there wasn't like nothing technical, nothing fundamental. I just saw crude oil. I was like, okay, it seems cheap. I bought it, and of course I lost money. But what's ironic is that right now it's like my most successful trading instrument. So it's quite close to me. So how turntables?
Yeah. I don't trade natural gas. I don't find that actually. So it's not too.
We touched a little bit on motivation, on inspiration. I would like to ask you, did you have like someone who was mentoring you in your beginnings, someone who inspired you, who motivated you to get better?
Yes, I think it's to learn how to trade. It's really important, like any other profession. So trading is a profession, right? It's a business. And to learn a profession, you need some coaching, mentorship. You need to go somewhere to learn it from someone who is better. I'm a firm believer that you cannot learn this profession by yourself. There might be always the 1 in a million, but it's not the norm. People have to think about, okay, what's the norm? The norm is not, hey, I research on YouTube, watch a couple of YouTube videos, and now I'm a consistent profitable trader. That's not the norm, right? That's the anomaly. You don't want to compare yourself with the anomaly. So I firmly believe you need somebody to learn from that is better than you, that you're looking up to. Hey, I want to be this person at some point of time. So yes, I had mentors, of course. I had coaches, and some of my coaches were like former floor traders from Chicago Mercantile Exchange, one from the New York Stock Exchange. So yes, I learned from old school floor traders who kind of retired from the floor and went to the kind of educational job trading, online trading business in a way. So yes, so I'm very grateful that I learned from real traders back in the days. That it made my journey also rather smooth. Of course, like trading, like any business in the world, there are ups and downs. It's like a roller coaster ride, especially in the beginning. But it went rather smooth in terms of the process. I know what it required to become successful in trading.
Yeah, I would definitely recommend everyone to Google what the floor trading used to look like. It was completely wild, completely different from what's going on now. So definitely recommend everyone, because back then those guys were like the OGs.
Yes, exactly. Yeah.
Okay, we can move a little bit forward. Could you describe a little bit more the moment that was pivotal for you when you decided, okay, I can now quit my job, I can fully trade, and how did you celebrate it maybe?
I'm not big in celebrations, to be honest. I don't even celebrate my birthday. No, for me, every day is, for me, I feel like every day is the same. It's just a daily grind. I like that. I'm not a celebrator. But what I realized is that trading on the side, again, is a completely different ball game than trading full time. Because trading full time, now all of a sudden, you realize you depend on the trading income. Before, when you trade on the side, you have you have your maybe monthly paycheck, say you have the safety net. So your trading performance doesn't necessarily matter, and then people maybe don't take care of their trading performance so much because, hey, I have my safety net, so I can quote unquote gamble a bit. Maybe that's some people's perception on things they could handle trading in that regard. But for me, it was like then, okay, wow. And I had back in days, I was married already, and so we were expecting a daughter. So it was like a lot of responsibility. So for me, I even at one point of time, I had a printout on my wall on my home trading desk. It said, and even I had this quote in my trade plan saying, trade like your life depends on it, because it literally did, right? If I mess up, it's not only
you, but your family as well.
Me, but my family and future family as well. So I think with that mindset, you trade with way more responsibility, right? And I think that's why people have already, and it's kind of the key lesson here, that even if you trade on the side, if you start trading in general, you have to trade, if you want to make this work in the long term, you have to trade like your life depends on it, because then you handle things with way more discipline, with way more patience, and with way more perseverance as well.
Yeah, it's great motivation, I think. Very profitable right from the beginning, or did you have like some losing streaks or something like that? Or
it's been so long. For sure, I had losing streaks in the very beginning, but I never had. So when I quit my job, I was consistent already. Of course, making not the amount of money that I make now. It's like all the journey, and like you start small and then you scale up. So the more money you make, the more capital you have, and then you make more money as well. You take more, not necessarily more percentage risk, but your account grows, and so far your absolute risk number increases as well. But I think, but I was consistent from the very beginning, making less money than I'm making now, obviously. But I think, yes, as I said, it's like this journey, you always have some roadblocks. It's like any other business, right? Don't expect it's going to go straight up, right? There's going to be some ups and downs, and but as long as you stick to your rules, and I think if you have a consistent set of rules that at the end of the day, over a period of a month or a couple of months, shows profitability, then you will end up profitable, right?
Yeah, I think that's a great tip, to have consistent set of rules and follow them.
Exactly, right?
So, like, it's not only motivation, inspiration, but discipline. Like, it's like trading, right?
That's also interesting. It's also interesting discussion, and I will cover that in my next YouTube video as well, where it's like, okay, people have these discussions. Hey, there's psychology versus skill. What is more important, right? And I'm a firm believer that psychology is important, but skill is the main driver for your success. Without skill, you cannot make it in trading. You can have the best psychology, but if you don't have the skill how to trade, your psychology will not help you. So you develop skill, and by developing skill, you develop confidence, and then you develop your psychological strength as well. It's not the other way around, right? So yes, skill building comes first, and then you have the psychology on top.
Okay, I guess like we can apply this to every part of your life, right? Like
you can
build discipline.
You can apply this to every part of my life, but you can apply this to every profession in the world. Which profession you can master with only with only good psychology, right? You always need the skill. Whatever you do, you need the skill first, right? And then you develop with like the confidence, with the experience, with the practice. Practice then in this case makes perfect to some regard. And this is you develop your psychology.
And how long did it actually take you to quit your corporate job? Like how many years was it?
I hate this discussion because it was rather quick, and I don't want people to take this as a benchmark, because when I say it took me roughly a year, yeah, and people are, well, you managed to quit in 1 year. I want this as well. Right? It's like, I quit within 1 year, but I was not as good as I am now, right? So. And I was not making that amount of money that I'm making now. And I improved my trading a lot from when I quit my job. And I also have to say, when I quit my job, I think it's important that people have a safety net, and not living from paycheck to paycheck, because then trading also doesn't work. If you're forced to make money, you should give yourself some buffer in a way that you have, okay, let me say I have X amount of money in my bank account, and even if trading doesn't work out for like a quarter or so, I can still live my life like I lived it before. You know, you don't feel that pressure. That mental pressure is important. So I don't want people to take me as a benchmark and say, okay, after 1 year I have to quit my job. No, right? That like everything came together. I had a nice safety net. I had a great wife who supported me as well. So, and I had good mentors. And I had a rather smooth journey where everything fit together. So, yeah.
Yeah, I think those are some valuable tips for the beginner traders, like have a safety net, be constantly profitable, and then you can think about quitting your job.
100%, yeah. And then understand that once you depend on trading income, it's again, from a mindset perspective, again, different than having multiple income streams, and who cares about trading, right?
Let's touch a little bit on education, because you've been trading for quite a long time. So I guess the way you educate yourself changed a lot. Back then, I guess it was more books. Now it could be podcasts or YouTube videos. Or could you describe how do you educate yourself? Because I think like no trader knows everything, right? Because if you want to be a successful trader, you need to educate yourself all the time. Would you agree? Or
no, I would not necessarily agree. I would say I don't have to educate myself anymore. It's, look, once you found your way, once you found your edge in the market, your set of rules that are proven to be consistent over a long period of time, don't change anything. I tell people, if you're consistent, don't change the running system, don't change a winning team. Because the only thing that you have to do is scaling up capital. You want to make money, don't change, please, you're consistent, don't change anything. Don't take more trades, don't add something to your strategy, don't change anything, don't touch anything. The only thing you touch is basically you increase your risk by basically not percentage-wise, right? You don't have a $1,000 account and then from 5% risk to go to 10% risk. I'm just making this up, right? No, you increase your capital, but your risk percentage, for instance, stays the same. And so you just by default, because you're increasing capital, you take more risk, you're going to make more money. That's what I consider milestone planning. So all the whole equation of scale set of rules stays the same. The only thing that changes is the capital. The only thing that changes is the capital, the scaling capital. And then by default, you're going to make more money. That's what I consider milestone planning and what I teach people. This is the only variable that changes, your capital. And this is where profits come into play, right? You can increase your capital rather, quote unquote, easily, right? Again, like you're trading a 400K Fintokei account, consistently profitable, and you want to make more money. Don't change anything on that strategy. Add another prop firm on top and go to 800K. That's how you scale. That's the only way how you scale. And it's so simple, like not easy, right? It's so simple that people sometimes don't understand that it's so simple to make more money. It's just scaling capital. And that's why prop firms are so great. And that's why I feel like I'm a prop firm ambassador in a way, because it provides so many opportunities for people who also lack in capital but have the skill, and then for them easy to scale and make a living with trading.
Yeah, those are, again, valuable tips. So the strategy stays the same. The risk management, I guess, stays the same.
It's always
the thing that changes is the capital.
Exactly. Yeah, absolutely. It's just it's so simple, and people make like a whole science out of it, but that's really it.
Yeah, still trying different stuff.
On top, like yeah, it's so simple.
Yeah, we should probably say that Bernd himself is an educator. You're running quite a successful YouTube channel, programs on 100,000.
Oh, thank you. Just recently achieved. Yeah, we just celebrated a few days ago.
Yeah, when you're just talking about it, you are quite new to the social media game.
Exactly 1.5 years basically on it.
Yeah, you're rising really quickly. The last videos I saw on your channel, it was uncovering the trading scammers. So that was like one of the points I wanted to cover a little bit.
Yes.
Maybe if you could like recommend to the viewers, how do you actually know that someone who is teaching you trading, he's actually successful? He's not fake guru. Is this why you did it?
Yeah, I mean, we could fill an entire podcast of this topic because, I'm proud to be a trader, but I have to say sometimes I'm also embarrassed and kind of disgusted by our space. Because the problem in our space, in our profession, that there is no real accreditation system, certification system that really like make people stand out, like an official, a licensed way to make. It's like a pilot, right? It's clear. You're a pilot? Well, show me your licenses, right? You're a doctor? Show me your licenses. You're an engineer? Show me your licenses. You're an XYZ, a lawyer? Show me your licenses. You're a trader? Everybody can now be a trader.
Show me your Rolex.
Yeah, show me your Lambo and show me your Rolex, right? And your AP, right now. But that's the problem, right? That's the problem in that space. And I see as my duty as well as my responsibility, because I'm also an educator, to change the narrative a little bit and change I know it sounds like big words, but that's my goal from the very beginning, because that's why I jumped into the online trading space. That is quite harsh, right? It can be quite harsh, and I experience it myself as well. That I want to change the industry as well to a better and showcase, okay, hey, look at, like, it doesn't matter how much followers you have. It doesn't matter how much subscribers you have. It doesn't matter how much Lambos you have, right? It doesn't matter how much watches you have. What matters is how much proof somebody can show that he or she is a consistently profitable trader. And then you have what I have basically, and I would consider myself one of the only, if not the only FX trader in the whole world who has a third-party audited and verified results from a 2 million A-book margin account, right? And this is a third party who kind of verified these results. I'm the author and record holder at FTMO, verified by FTMO. I have several prop firm certificates, payout certificates, funded. I did a $2.1 million challenge documentary on YouTube where I took all these trades, like Fintokei trades as well. This is where I basically got introduced to Fintokei, where I said, okay, hey, I want to do this $2.1 million challenge documentary. I always try to push the limit to say, okay, what can I do to showcase more credibility, to get this kind of accreditation system, working in a way. And so I do all these things to showcase that this is what an educator, somebody who's speaking about trading, educating people online about trading, has to have, so you can trust them. And everybody else who cannot show anything is most likely a scammer. It's a fraud, right? Especially there's so many red flags, right? All this luxury lifestyle showcasing, focusing that over real skill building or results. All this account flipping, this $1,000 to $1 million in like, what the heck, right? This is all scammy as, right? I don't want to start cursing, but that's how I feel about it. It really it makes me emotional. And yes, I think I plan also throughout 2025 is to uncover more of that stuff, because this is really bothering me big time, and that's why I'm doing it, because it's just so horrible, the industry.
That was my next question. You already covered it, that you actually decided to make public your verified trading results, which is something that me personally, I don't think I've ever seen that.
Exactly, yeah. Me neither. And it took a long time to do that, right?
So I hope people believe you now.
Yeah, but that's the online space. Yeah. That's the online space. You will always, with fame comes the hate as well. I learned that I really learned that lesson. You cannot have only one side. You have always both sides, right? Yin and yang. You have always both sides. And it's something I had to learn as well, and deal with it as well, like learning how to deal with it. Still learning it, because sometimes I'm just like, what the heck? Like, how low IQ some people can be in the online space. But this is a learning process as well, to deal with the negativity, but with fame comes hate, what to do, right?
You're currently living in Dubai. We could say it's one of the biggest financial cities right now.
Yes.
Hotspot, the hotspot for all the trading guys, I guess a lot of crypto guys. So I think we've been living there since 2009,
exactly,
right?
Yeah.
So we must have seen how it changed.
Yeah, crazy. Dubai changed. It's drastically changing. Even now it's changing.
Would you say in the past 5 years there's more of those trading guys?
Yeah, it's definitely, I see now more trading, so traders moving to Dubai, definitely, because it's a nice place to be, where it's easy to open up a business. It's kind of tax-free in a way, and not many questions being asked. Although it gets all more regulated, but then also when crypto comes into play, it's there are a lot of loopholes and stuff. So it's a good place for traders, for real traders, but also for maybe not so real traders coming to Dubai. But in general, it's a great place to live, and I consider it home.
I think it's quite similar to Miami, in USA.
Yeah, but I would not like to compare myself to Dubai to the Miami scammer town, because this is way more. This is I would say, the origin of the evil.
Okay, let's go a little bit deeper into your trading style.
Yes.
Would you describe yourself as a swing trader or scalper, or how do you trade?
So, in general, and this is also quite interesting, because always I consider myself as just a trader who is making consistently money, right, in the financial market over a long period of time. That's my definition as a trader. But once I came into the online trading space, people ask, are you scalper, are you day trader, are you swing trader? So I had to classify myself. And so I had to classify myself. I consider myself a swing trader, right? I hold positions for a longer period of time. How long? Well, my average holding period right now, based on my $2 million verified audited result, is roughly a little bit more than 30 days per trade on average. So yeah, I was quite surprised that it's that long, but it doesn't feel that long. But yeah, it can be multiple weeks that I hold a position. So I time my market usually based on a daily chart. So that's my execution time frame is usually daily to weekly. Yeah, daily to weekly time frame. And in terms of strategy, I call my strategy a two-step mechanical approach, because I married the best of both worlds, fundamentals and technicals. Fundamentals to get a bias in the market, bullish, bearish, or neutral. And I use my own proprietary indicators that we developed in-house that are fundamentally based and not price driven, which is really big difference, because everything that is, people have to understand that indicators, right? All these conventional indicators, they're all derived by price. So what has to happen for them to move? Price first. The price has to always move first, and then they move. So metaphorically speaking, when you use these technical indicators, most of the time you're late to the party, because price has to move first. That's how I make this analogy. And the tools that I use are derived from valuation models versus interest rates, gold, US dollar, seasonal tools, tools that are based on the COT, Commitment of Traders report, that is released weekly by the CFTC. So I use these tools to get a strong fundamental bias, bullish, bearish, neutral. If I'm neutral, I'm staying away. If I'm having a bias, bullish or bearish, then I move to the step 2, which are the technicals. And technicals, I time the market, so place my set, my entry stop as target. It's like I use supply and demand. But 80% of the trade is basically the fundamental bias. The timing is like secondary. That's what I use. Yeah. And this is all.
Perfect answer.
It took me a little bit of time to elaborate, but I think it makes sense.
It's absolutely detailed, and I love it. Would you agree that trading is basically managing risks? Like, I think of trading like managing risks.
I love it. You know, one of my mentors that used to be the biggest market maker in natural gas on the New York. You know, we're going always back to that natural gas. It's so interesting. Of the new at the New York Stock Exchange, he said, "You're not a trader. You're a risk manager.
Yeah.
You're a risk manager. You're managing risk, right?" So this still stick to me. But yeah, I'm a risk manager. Absolutely.
Yeah. Could you tell us a little bit about your risk management? Do you use like fixed percentage you're willing to lose, or like fixed dollar amount?
So I'm a big proponent, a big fan of the fixed dollar risk approach. Why? Because you have to be confident with a certain number and not with a certain percentage. Let me give you an example. Now, you start off trading, right? You're completely new to trading. And let's assume you get already slowly skilled. You find your edge slowly and you buy your first challenge. But you think, hey, let's go big. Let's go big or go home. So you buy the biggest challenge, the 200K challenge. And then you say, okay, let's go buy the percentage risk. And you take 1% risk per trade. And then you all of a sudden, okay, what is 1% on a $200,000 account? It's $2,000. But maybe before, I've traded only $100 or $50 or maybe $200, whatever it is. But you've definitely not traded $2,000 real, quote unquote, real money, right? So the jump from risking $100, $200, or even $500 to now all of a sudden risking $2,000, that's mentally a big jump, and you cannot cope with that. Because I've been there, I know that, right? Nobody can cope with these big jumps. That I say you have to scale slowly. And that's why it's easier to say, okay, let me find a number, absolute dollar risk amount approach. Find a number that you're confident with. Are you confident risking $500? And you feel good about it? You don't wake up in the middle of the night and check your phone. So there are simple tests that you can do whether you're confident about the number. Like, are you confident to lose $500 5 times in a row and the 6 trades you still take with the same confidence? There's multiple tests that you can apply on yourself to know, are you confident risking that amount of money? And so I believe in the fixed dollar risk approach because of that, because you have to scale you have to get used to these big numbers slowly. You cannot jump from 0 to hero. It's impossible, right? Mentally, you can just not cope with that. And does it make sense for you?
Yeah, absolutely. And what risk reward ratio do you use? Since you're taking the $400,000 account,
yeah,
I guess it's like 4,000.
It's random, to be honest. Yeah. No, actually, to be honest, I'm trading right now between 1% and 2% risk per trade because my zones are rather bigger, right? Sometimes I'm using a whole weekly zone. I'm just like, hey, that whole weekly zone is nice. I don't know whether so let's assume I want to buy something. So I'm using a demand zone, supply and demand. I'm using a demand zone, and I'm looking at the daily and the weekly zone, and I see, okay, the weekly looks already quite nice. I don't necessarily need to refine it on a daily. I don't know how to refine it on a daily. I rather than say, okay, I sacrifice on risk to reward. I sacrifice on risk to reward, but the probability of not getting stopped out, I make it bigger. So I increase the size of the zone, sacrifice on risk to reward, take maybe then, because the zone is bigger, take not 1% risk per trade, I take 2% risk per trade. And then I'm happy with the 1-to-1 something because I personally have a high win rate. But that kind of approach, I don't necessarily recommend to big beginners, they, I would say, have a fixed risk to reward, which is 1 to 2 maybe. Your trades should at least have a 1 to 2 risk to reward ratio, because this means that you can lose 50% of your trades and you're still profitable if you go by the fixed dollar risk approach. Because if you do random risks, then the whole like KPI system, the key performance indicators, they don't make any sense, because well, if you trade, if your plan is to trade always $500, but all of a sudden you say you're getting in a good mood and you're trading $2,000, right? And you lose that $2,000, then all the other profits that you made,
they're gone.
They're gone. Yeah, exactly.
Okay.
And I see that a lot from beginners, right? They are random. That's the problem. They're random with the risk profiles. And then the whole like KPI system, win-loss ratio in conjunction with the risk to reward ratio, is like blown out of the window because they have random risk profiles, so they cannot measure their KPIs.
Okay, so we have your trading strategy, we have your risk management. Could you tell us now what instruments do you prefer? Do you have like some favorite instruments? Are you multi-asset trading?
Oh, yes. Everything. I look at everything. For me, since I'm a swing trader, I don't require a lot of time on the screen. I do my analysis because, again, we quickly touched on that. One of the important tools that I use to analyze the markets is the COT, the Commitment of Traders report, that is released weekly by the CFTC. And this is released weekly, and that's basically updated for me to buy time on a Saturday morning. So I sit on my screen, I open my trade station that I have open here right now on a Saturday morning, and then I analyze the market. So I start with equity indices, so Dow, S&P, NASDAQ, and so on and so forth. And I go to energies, crude oil, natural gas as well. And I go to precious metals, gold, silver, palladium, platinum. And then I go to FX majors, only FX majors, plus the US dollar index. And then, but also the futures, I'm only analyzing the underlying asset. And then I'm also looking at agricultural markets like corn, soybeans, wheat, coffee, cocoa, you name it. Do the analysis. It takes me maybe 1 hour or so, because I'm analyzing weekly charts, monthly charts. So I have a top-down approach, monthly, weekly, daily. It's rather quick because you do that every single week. So there might be not many changes depending on the volatility of the market. And then you can quickly go through that for your weekly, you do your weekly analysis. And then you create your watch list. There might be some interesting trades, one on the FX majors, one on the indices, one on the precious metals. You create a watch list. You put these interesting trades for the week ahead in your watch list. And then you might place them on Monday once the market is open, and that's it. And then you let it play out. That's why I consider the set and forget and get a live approach, because throughout the week, you don't need a lot of screen time. You need, maybe me personally, well, I love the charts. I'm still going to look at charts, and I'm going to look at charts way too much. It's also my business. But like effectively to manage, I would literally need like 5 to 10 minutes a day maximum.
Oh, right.
Yeah, because it's like all based on weekly charts, daily charts. So, but of course, I look at way more on, because it's my business. I love it. I'm passionate about that stuff. So, but effectively, I would need that amount of time. So 5 to 10 minutes during the week, and I do my weekend analysis. So that's how it works. So yeah, there's not much time required, to be honest. Yeah,
that's surprising, to be honest.
Yeah.
So on Monday, you just go through the markets, use the COT report, try to find something that's interesting, maybe for buy opportunity, sell opportunity, or to stay away.
And it's already on the weekend.
Oh,
I prepare this my own preparations on the weekend, because
during the week you just.
And then during the week I just place these orders that I created the watch list during the weekend. Yeah, exactly. That's why I can do that all that traveling and running multiple businesses and stuff. And otherwise it would not be possible, right? If I was a day trader or scalper, right, and sit on like 20 at like 24, the trading would be a 24/7 job basically, quote unquote, right? Then doing like all the traveling, doing all these podcasts, doing a YouTube channel, running a business, and so on and so forth, educational business that is growing now also heavily. So otherwise this would not be possible. But trading doesn't require actually almost no time at all for me, right?
Yeah, but you'll definitely touch on the lifestyle side of trading a bit later on.
Yeah.
But what I want to know now is, what your trading setup looks like. Because when you go on social media, it looks like everyone has 4 huge monitors, 6 flat screen TVs. It almost seems like the more monitors you have, the higher probability to be profitable. So what's your take on that, and what does your setup
Which is like one of the biggest, this is again one of the biggest myths in the trading space as well. Not the biggest, but it's still a myth. Actually, funny side note, I got a DM the other day on Instagram asking, hey, and this was a real DM, that this was not a show, saying, I have only one screen, can I still enroll in your course? I said, like, even with 0 screens, you can enroll. The screens don't matter. The screens don't matter. You will survive even with just a laptop, like literally, right? I was really surprised that people still believe in that myth that you need multiple screens, right? So no, one screen is more than enough, right, for everyone.
Yeah, it's kind of a funny question because, we have...
But I also use multiple screens. Why? And I fully admit it, because it looks cool on social media, and I like it. I like that tag. I like when it looks cool. Yeah. Don't judge me on that. I admit it. I do it for show. But I just like the style, It just has to look fancy. Like any other office.
What's funny, I think it's like you have one of the best traders out there, and you're going to ask him if it's okay. I have only one monitor. Can I start trading?
Yeah, exactly.
Okay, let's move a little bit forward. Let's talk about Fintokei for a little bit.
Yes, absolutely.
Yeah, I already said you get your payouts totaling almost 70,000, $67,000. You are actually a professional ProTrader, right? You don't manage any of your own money.
Not anymore, no, because I managed enough funds, exactly. And it's,
why did you make this switch? And what do you think are the advantages of managing ProTrader money? I think we already touched a bit.
Yes,
in that.
I made the switch actually only in the very beginning. So my very first challenge was in 2022, which was in July 2022, which was an FT mode challenge. This was my very first challenge. And back in the day, I only started because of the certification that you will get once you pass a certain level, a certain test, certain evaluation, or get a certain payout. For me, it was like, because back in the day, I felt like, okay, as an educator, I never started because of the money, because I was trading my own funds and I was quite doing okay, right? I was really because of, hey, thinking, how can I as an educator stand out from the crowd? What can I do better than others, right? How can I be the needle in the haystack for others? And I was like, hey, I get these certificates, all these QR codes, and like, amazing, right? And then, okay, I was doing that. And then at some point I was realizing, and I didn't know that back then. I was very naive that, hey, I can add multiple prop firms. And I realized that then slowly that the sky's the limit. I can go 7-digit. I can go beyond 7-digit. I never have to touch my own money again if I don't want to, because I can manage a couple of millions of prop firm capital. And then you make like 1% a month. And then if you just manage just a million, and you make like 1% a month, you're doing well. You're doing quite okay, right? Most people can live on that salary, can live on 10K per month, nicely, comfortably, right? And so then at some point of time, I realized that, and I was just like, okay, I'm also a very competitive person. So I was like, okay, let's scale to the limit. And I tried that. But then I also realized it has its limitations, because the prop firm space is not as similar to the education space. It is not as nice as it seems. There are only a few credible ones out there. That's why I'm here as well, because Fintokei is one of the credible ones. So the scaling part has its limitations if you want to get it paid out. So that's my prop firm experience. So when it comes to, there are clear benefits when it comes to prop trading. And I said already, I feel like I'm a prop trading ambassador, because it's kind of, in a way, quote unquote, risk-free trading, because you only risk your challenge fee. Right, you can only lose your challenge fee.
And you get it back.
And you even might get, even if you make your first profits for some prop firms, you get that challenge fee back, right? Reimbursed, like you don't risk anything anymore, right? It's crazy. So it's risk-free trading. And then for people, the lack of capital, right? There's so many people that lack capital. They might be skilled, and for them it's like easy to get skilled, but they never get started because they think, I don't have capital in the first place, so how do I make money? Because if you again, with $1,000, you can purchase a 200K account, right? So make 1%. If you make 1% on $1,000, if you deposit it on a broker account, 1% on $1,000, what is 1% on $1,000? It's $10.
Yeah.
Wow, congratulations. 1% is good, by the way. Achieve 1%. If you can achieve consistently 1% per month, you are a damn good trader. Don't get me wrong, because people sometimes ask me, hey, is it possible to achieve 10% per month consistently? No, it's not. If you're like the best hedge firms in the world, they make between 10 and 12, 13% per year. The smartest people, the biggest teams in the world, they make 10 to 13% a year.
Barely beating S&P 500.
Barely beating the S&P 500, the best firms, the smartest people in the world. And you asking me, can I achieve 10% per month? Good luck. Try it. Try it consistently, right? By not over leveraging yourself. So, and then for like $1,000, you can buy a 200K challenge, and now 1% is not the $10, is $2,000. That's like day and night. Some people can live by making $2,000 a month. That's in some countries a nice monthly salary, right? So the lack of capital, the scalability, it's risk-free, and then you have the profit share. You get most of the profits is up to 80-90%. So hey, happy life. Now, this level is the genuine prop firm space, the genuine. There's a lot of scams outside. We talk only about the genuine one, right? Don't come me in the comment section now. Hey, this probably there's so much scams outside, but we talk about the legit ones. This levels the playing field, meaning you only, as a trader, you don't have to worry about capital anymore. You only have to worry about getting skilled. That's come on, it's like a no-brainer for me. Yeah. Starting to trading now, this is the biggest no-brainer in the world.
Yeah, imagine like the regular guy, how much time would it take him to save 200K? So
never.
It's like
yeah.
As you said, almost risk-free trading. Yeah. It's like amazing. Would you say, as a trader, your approach when trading your money and the profit account, is it different?
Yes.
You like risk?
Yeah, 100%. Yeah. It's also different. It's also a different game in a way that, because you have daily drawdown limits, you have max drawdown limits, which is between daily drawdown limits between 4 and 5%, or the max between 8 or 10%. So you have to take less risk. You have to be a better risk manager if you want to do this consistently, and you don't want to be a account flipper or anything like that. Let's only talk about like traditional, really professional trading. So if you want to make this consistently, then you have to adjust your risk management with your own trading account, because of usually lack of capital, and you want to make a decent ROI, you risk much more, right? So risking 5% on an old personal account is nothing special, right? But doing 5% on a proper account is not really smart. Yeah.
Okay, let's go a little bit deeper into your Fintokei journey.
Yes.
How did you hear about Fintokei for the first time? Because I think it was a challenge or something like that. And what actually made you try our challenge?
So I was I was doing an announcement online. Again, I always want to push the boundaries. I want to push the limits, and I always want to do things that nobody has done before. So I was doing the announcement and saying, hey, let me do these challenges online, live, in front of the whole world on my YouTube channel. So I announced online I want to do a live YouTube challenge documentary where I tell people what trades I take in advance on my challenges, and let me collect as much challenge value as possible. And by making this announcement, Fintokei reached out to me and said, hey, they want to participate, which was me. There were a lot of prop firms that are also, by the way, I don't want to call out names, but big ones that didn't want to participate for various reasons, I guess, right? But Fintokei was so kind to provide me the highest allocation challenge value, which was 400K. So I had in total, then I had throughout 6 prop firms, $2.1 million challenge value. And then I did this, I think it was like 4 episodes, and then I passed the evaluation of all of them, because that's also the strategy. I copied them the trades. I take one trade and then I copy them throughout all manually on all prop firm accounts. So yeah, this is how I got introduced. So Fintokei was actually willing to participate, to provide me with these challenges for me to showcase my skill online to pass these challenges. So I passed it, and then I continued trading with Fintokei. And I think also, yeah, everything else is history. And that's why I'm also here, because I'm really surprised, not surprised. I mean, yeah, in our space nowadays, you have to be surprised when everything goes well. Because also with one of the prop firms that was part of my challenge documentary, I made $33,000, and then they closed their doors and they went bust.
Everything was smooth with Fintokei.
Yeah, but with Fintokei, everything was super smooth. Even payouts, like within 24 hours, super surprised. There are no limitations. So there's literally no limitation that I would say that is a limitation that bothers me, because some prop firms, they have limitations. There's weird consistency rules, weird rule this, weird rule that, coming up with new rules overnight. There was no limitation that I would say, hey, that bothers my trading style, or I have to adjust my trading style. So super smooth. So that's why I'm happy to like kind of also be here and talk about it.
Yeah, we are very happy too. You actually showed me a few of your trades, and what actually amazed me was how high your win ratio is. Because you make only a few trades, you definitely can wait for the right trade, and I saw that most of your trades were actually profitable. So could you tell the listeners, the viewers, how do you avoid overtrading, picking only the good quality trades? How do you do that?
There are few mottos I live by. There are 2 mottos I live by: less is more, and quality over quantity. So that should be in everybody's trading plan. Because not yeah, exactly, not only trading. So there's a fine. So since I'm a swing trader, I cannot have an edge. I mean, in general, I believe in, as a trader in general, whatever you do, you cannot have an edge every day, right? You have your edge is, to find an edge in the market is really rare. Otherwise, it would be super easy to make money. And since it's not super easy to make money, it's really, you find your edge not very often in the market. So you have to have very strict rules. And I have very strict rules. I call them all stars aligned. Some people might call them A++ setups, whatever it's called. But it means like you have a list of criteria. I'm just making it, I simplified for the audience. And your criteria list has like 5 points. And they have to be all ticked. And only if they're all ticked, you are gonna place a trade. And if they are not ticked, if only 4 out of 5 criteria are met, then you're not gonna take the trade. And this is for people sometimes too hard. They don't even have that fixed criteria, right? That fixed set of rules. They're more like vague when it comes to the set of rules. So once you have that kind of very strict set of rules, and then only if all rules are met, and then you get into a trade. I think this makes me, because sometimes there might be a week where I don't have a trade. It might happen that there are 2 weeks that I don't have a trade, right? And then there might be a week that I'm in 2-3 trades at the same time. It's just based on my criteria list, right? That the market chooses for you when the market is ready. You don't just open the laptop and boom, right? It's like, no, the market gives you the signal based on your list of criteria, as everything has to be met, and then you go into a trade. It's the biggest myth in the trading industry is that more trades make you lose more. I guarantee you that, right? What makes you more money? We talked about the scaling capital. That's the only thing it's not taking. Yeah, me also understanding that, I think makes me more disciplined and makes me more like focus on my actual set of rules.
Could you maybe sum up the set of rules you follow? Because you already probably said all of it, but like to sum it up.
Okay.
The set of rules.
Okay. My set of rules. So it depends on the market, okay? But let's look at, I want to do it with currencies. So let's assume I look at the euro dollar. It could be any market, but then I'm looking, first of all, I'm looking at the underlying asset, which is the futures, which I would look at EC. So my first step would be, I look at the COT report. I want to see what the retailers are doing, because we know retailers just by statistics, retailers are always wrong, like always, right? So I want to do the opposite of what the retailers do. If the retailers are heavily short exposed, then I don't want to go short, never ever. Even if all other rules would tell me go short, if the retailers are heavy short, I would not go short. So I want to do literally the opposite of what the retailers do. So that's my rule number one. And then there's also on the COT report, this is a little bit more advanced. I'm trying to summarize it. The fund managers, they are like the trend followers. So they track price, all right? So they track price. So they should be always, their graph should look like the chart. So when the chart is topping, they're topping as well. When the chart is bottoming, they're bottoming as well. And there's something called divergences, meaning if all of a sudden, and this happens rather rarely, if the fund managers don't track price anymore and price is front running the fund managers, or the front managers showing the opposite of what price does, that's a divergence. And then basically for you, that's also a sign that you follow, rather you do what the fund managers are supposed to do rather than what price does. So you look for divergence. It sounds very abstract. If I explain it, this would be another whole lesson to explain it on the chart. So, but I look at two things: opposite of retailers, but I want to do the opposite of the retailers. And rule number two is I want to do the exact same thing than the fund managers. And sometimes they're showing this kind of divergence, and then I know, okay, price is faking the move, but fund managers want to do the opposite. So I want to do the same that fund managers. And then ideally, I want to look for a seasonal sweet spot as well, a seasonal top or a seasonal high, because kind of all price charts are seasonal to a certain extent. Some markets are more seasonal, some markets are less seasonal, but all markets are seasonal to a certain extent. And then I look at a valuation model that I created myself. I'm looking at, when I look at the euro, because it's the euro dollar, I'm looking at the valuation versus the US dollar, whether I'm undervalued versus the US dollar or overvalued versus the US dollar. So if I want to buy, now let's assume I want to buy the US dollar, we keep this brief. I want to have retailers super bearish, because I want to do the opposite of what the retailers do. I want to have the fund managers show a divergence, that they are also long exposed and prices may be dropping, but the fund managers are already bullish. All right, so I have a divergence. Then I want to have a seasonal low. Plus, I want to have being undervalued versus the US dollar. And then I have such a high probability that this trade is working out in my favor. And then my last criteria is then technicals, where I look for a demand zone, look a weekly, daily demand zone, I time it, and that's it. So you see, it's like, actually, there are a lot of levels that has to be met. And this doesn't happen every week. It doesn't happen every week, right? It happens to me once a week on all the markets that I look at one single market, right? But then I have such a high probability of success that I can also take 2% on a trade. It doesn't matter, because the likelihood of success, probability that the trade will work out in my favor is very, very high. So yeah, and this is basically my criteria list. Super strict, simple for me, right? And I go through all the markets, go through the criteria list, met, not met, okay, I don't take a trade. Or here, everything is met, I take a trade, I place a trade and see if it works out.
Yeah, I think this is super valuable. If now you would be so kind to maybe show us some of your most successful trades.
Yeah.
Okay, we could please go to your platform.
Yeah.
You could maybe like comment what made you do this trade,
Yeah.
the criteria, if it was okay.
Yeah.
How did you manage it?